Most traders obsess over price, but they ignore the timing, and that's where TPO charts come in. Now, timing is equally as important as the price of your entry, of your SLs, of your TP, and whatnot. So, you do need to master the timing of your trading as well. In many scenarios, you would have witnessed that you got into a trade, the price hits your SL and then reverses in your favor. So, the only issue here was the timing of your entry. So now you know what's the importance of timing in your trading. So in this particular video, I'll be talking about what TPO is, what it does, how is it so powerful, and why do you need it. Alright, and obviously I'll be covering a lot more other pointers as well. So let's get started. Let me first explain you what TPO is and how does it look like. Now in TradingView, you've got two options. Either you select on the candles part, you can select time price opportunity, which is the long form for TPO. So yeah, TPO stands for time price opportunity. And if not that, you also have an indicator called as TPO on TradingView itself, and when you turn it on, this is what it looks like. So by the time you look at this chart and get a bit confused, let me clear your very first question, and that is on what time frame are you supposed to use this, and that is on 30 minutes only. Alright, so most of the traders that I know and personally I've been using on 30 minutes only. There are different time frames on which you use it, but it has a different significance on those time frames. So I'll be explaining you that as well. So now you know how does a TPO looks like. Now if I just try to zoom in on all of these blocks that you are seeing right here, so if I just zoom in, you can see there are certain alphabets written on each of the blocks. Alright, now what alphabets are written, that's absolutely not important, but what matters is that at a particular price, how many blocks do you get to see. So let's say at 108.200 you have a single block, just below that you got a single block, but then if you come around 107.250 you see there are 4 blocks. Alright, so what does this mean and how are these blocks formed? Alright, they are not pre-formed, they will always develop in the current market. So how does this work? Let's try to understand that as well. Alright, so each of these blocks that you see, it represents the timing that market has spent over a particular price. Alright, so if there is a single block, now there can be variations in the timing. So let's say for the sake of example, if market spends 5 minutes at a particular price, a new block is added. Alright, so since there is just a single block here, that means that market has spent less than 5 minutes at around 108.2. Alright, you get to see about 2 blocks at 108 exactly. So now you can say that market spent about 10 minutes just at this particular price. And now why is this timing important? I mean, why are we even trying to understand this and how does it help you? I can literally assure you, by the time this video ends and if you have completely watched it, you are going to be someone who will look for more and more resources to learn more about TPO. It's that interesting and it's that insightful, and it helps you a lot to build your edge over the market. All right, so I'm sure you are as excited as me, since I am excited to show it to you guys how it works. I'm sure you guys are excited as well to learn more about it, and if you are, just make sure to quickly drop a like on this video before we get started. And yeah, here we go. So since we were talking about these blocks, now you know how these blocks are formed and what are the significance of the blocks. So coming to the significance part, because we have not yet discussed that. So if you see that market has spent, let's say, an hour at a particular price and just 5 minutes at a different price, what does this mean? That this is the fair price in the current profile. All right, so every time when you see something like this, like if I mark this and then if I mark this and even the previous one and more profile that we have on our chart, every single of these blocks are called as profile. All right, so all of these profiles are developing on a 30-minute time frame for us. So what do we see here? That in each and every single profile there are something different that you can notice. All right, so there are shapes as well for the profile. We are obviously going to be discussing that as well, but right here you see this is kind of a balanced profile. All right, so if I just mark it for you, you can see this is an actually balanced profile, that there are no volume spikes, like there are no 10-15 blocks at the top and just a few blocks in between. That's not the scenario here, and this looks like more of a balanced profile. So what does this mean? This means that there are balanced buyers, balanced sellers, nothing too aggressive going around right where we are. All right, so that is what you know now. Also it shows you If you're someone who trades on the basis of price action, I would say this tool is a blessing for all of you, because it also shows you if your current price action is strong or is it not strong. Is it a good high, is it a strong high, is it a weak high or a poor low or something like that. Like, I'm sure you guys have heard about such kind of terms on every live stream that I do, right? But let's try to understand what those poor highs or poor lows are. So every time when there is an aggressive selling at the top, which you can see right here, all right, there are three blocks and you got to see that aggressive reversal. So that means this top is a strong top. I mean, this is where the market makers got involved, because what happens is, if let's say at this point of price where you got to see this aggressive wick, if there was just retail sellers, they could have not made this kind of wick. I mean, yeah, the volume coming in from retail traders is absolutely big, but not big enough to create aggressive wicks. So this wicks mostly are formed when there are aggressive market makers who want to reverse the price. And now you know that since market makers are sitting just around this price action, the chances of market to reverse and go higher is probably less. So let's say if you had a level of resistance somewhere around here, you can wait for a back test of this, or you can just wait for your level to get tapped once. If you see your confirmation, you can literally get into this trade because you are very sure that the highs that you have made are extremely strong. Now that acts as another confluence as well. Personally, I like to see at least 3 levels confluence in an area where I want to enter, and multiple confirmation for entry triggers as well. I've been talking about them as well, but I'll reveal some of them in this particular video. So now you know what these blocks are and how do they develop, and how you can identify if the highs that you have made are strong and if the lows that you have made are poor or not. All right, so basically if they are weak or not. So that is what you get to know. Now since we are done with the basic parts, now let's try to understand what are the benefits of using TPO. Now TPO shows you if the market is going to be trending, if the market is going to be sideways, is it going to dump or something like that. You get a whole overview of the market just by looking at the TPO profiles as well. Obviously that's not like 100% thing. There is nothing like 100% in trading, and that is what I always say. But yeah, this gives you a great confluence, a great idea in which direction the market might continue. So looking at this profile, what do we see? We see this was a balanced profile, so that gives us an idea that okay, the market might keep on ranging for a while, right? Then you also get to see different kind of pattern, which is something like this. All right, so it shows that the sellers and the buyers were active at the bottom of this profile, and then they were active at the top of the profile. So in between, the areas which have very few blocks is the area which is highly neglected, and there might be some orders which are pending. So if you see, if you just literally mark this block and just extend it, you can see that was the exact point of reversal for the market. That is exactly where it reversed from. So now you see how crazy and how accurate these levels are. All right, let me just give you another example as well. You see it marked an POC as well for you, right? It marked you a POC level. If I just literally extend it to the right side, you see the market again reversed right from that profile POC. So these levels are pretty accurate. Now you just need to identify which one are important and which ones are not. I'm very sure you will understand that with the experience. When you keep on using these tools, you will have a better understanding of all of these tools and what are the kind of shapes that market makes. Mostly there are, I would say, 4 type of profile shapes. So first is something like this, which is called as D shape or a balanced profile. Then something which is called as a P shape as well. So let me find an example for you all, if I can get an example. Yeah, so this is something like a P shape, not a perfect P shape, because yeah, it still has some volume at the bottom, so not this, but yeah, it kind of looks like this. Like if I mark the profile, the P shape profile would look something like this. All right, so that is what a P shape looks like. Now there is also another profile which is called as B shape. All right, so the B shape profile would look something like this. All right, so maximum volume at the bottom. In a P shape profile, the maximum volume is at the top. All right, so that is how it works. Now since we know the 3 profiles, first is P, second is B, and after that the third one was our D shape profile. Then there is something which is also called as a narrow profile. So it would look something like this. All right, like I mean the volume would just be inside this area and it would be just narrow and nothing happening. This occurs when the market is extremely trending. So yeah, you keep on seeing some kind of volume and the market just keeps on trending. So these are the different kind of volume profiles that you might get to see in a TPO chart, in a TPO profile. So now we know what are the different kind of patterns that a TPO profile makes. Just to give you a brief idea of what this profile will do. So if you have a P shape, all right, a P shape profile will give you a bullish move. A B shape profile will give you a bearish move. A D shape profile basically means that market has a higher probability to keep on ranging, and the narrow profile is basically for a trending market. Now, usually, if you want to have a broader overview, a broader analysis, a macro time frame analysis, you would want to look at TPO on the daily time frame. That is something that you can do. I mean, obviously, you'll have to zoom in a little bit, and then you will be able to see, all right, that what are the different kinds of profiles that you might get to see in the market. Like, then you can identify what is your bias and in which direction you can be planning to get into your trades. All right, so that is how it goes. Now we have learned about what TPO is, what are the benefits, what are the patterns of TPO. Since I was also talking about the benefits, I need to show some levels that you can be marking when you use TPO. So what happens is TPO shows you balance and imbalance in the market. So every time when there is a bigger imbalance in the market has to fill it. So just like how I marked this particular low volume profile, all right, where the profile was not that aggressive, you saw that market just dipped into it, formed this wick, and then continued to push higher. All right, so this is where the imbalance was. This is where you filled the imbalance, and then the market kept on continuing towards the upside. So that is how it works. That is how imbalance gets filled. Now, since we are done with that, let's try to also understand what are the other applications, like how do you use TPO and what else. All right, so understanding some significant pointers about TPO. TPO gives you about 5 kind of levels. First is volume area high, volume area low, and POC. Now, if you are not aware about 3 terms which I just used, volume area high, volume area low, and point of control. So if you cannot understand these 3 important pointers, I would suggest you guys to watch the FRVP video that I have uploaded on this particular channel. It will help you understand in depth about what these levels are and what are the significance behind them and how they are calculated. But just for a brief idea, I would say these 3 levels are the levels inside which there is a fair value for the price. So mostly the price will stay inside this box. If it gets out of it, this box will try to pull it inside. If you go below it, again the box will try to pull the price inside, until unless a new fair value area is developed, the price will keep on continuing ranging in that particular area. But yeah, so that's the significance. All right, all of these levels act as a level of support and resistance as well. You can use this level as a confluence in your trading as well. All right, so that's POC, that's volume area low, volume area high. Now there are also other levels which you can see, such as this purple line, another area of interest. And then also the important ones are this purple box that you can see. Obviously it's customizable, you can use different colors if you want to, but then there are this box. Now this becomes an important part of this video. I would recommend to specifically watch this part with your full attention. If you're busy watching your mobile phone or something else, I would highly recommend to stop that and listen for this particular part. Now what do you see is when the market started to pump in a certain direction, all right, when the market starts to pump, the only reason why it is pumping is because there are aggressive buyers at the bottom, all right, and then the momentum keeps on going. Again, some aggressive buyers enter, the momentum keeps on going towards the upside. So that is how it goes. But this momentum that travels from point A till point B is fueled by a lot of buy orders at the bottom. That is what is pushing the price higher. But that does not mean that the prices in between this momentum do not need to get filled. Obviously this area needs to get buyed as well. Until unless you take out this level, the price will never move to the next level. So the buying needs to be done. So what happens is when there is an aggressive push towards the upside, sometime, let's say this particular level is of a $5, this did not get filled completely. There are still a lot of pending orders around $5. Now what happens is there is an imbalance created in the market because this particular level did not get filled completely and price still continued to go higher. All right, so this level has created an imbalance. We call this as single prints. Now why? Because this is just a type of an imbalance. what you expect from this is that the market will reverse, fill this imbalance, which is, for example, that we have created here. It will fill this imbalance and continue the push towards the upside. All right, so that is how you use this. Now these are some of the most important levels that I will tell you guys that you definitely need to implement in your trading. These are some of the most important levels as well. So be it POC, volume area, low, the single prints, all of this kind of imbalance, it's pretty important in your trading as well. Also, since we were discussing about single prints, let's try to figure out how the single prints have worked in the past. Alright, so I see a single print right around this area. We had a single print, market reversed from there. So if you see, I'll highlight this area. So this is where you had your single print and the market reversed from there. After that, you had a single print around this area. Again, you reversed right from there. And even in the past, I'm sure there are many areas where you had single prints and the market reversed right from those areas. So single prints are basically imbalance in the market, which once filled, the market reverses after that. All right, so that is how it works. Now, since we know what levels to look at and how do we trade them, like imbalances, single prints, different kind of profile, and what idea they give us, I would say you pretty much know all the basics of TPO. You are prepared with some of the most important things that are there in TPO that you can start to learn. Obviously, I tried to keep this video as basic as possible. The reason being that I do not want you guys to get confused with your very first experience with TPO. That's definitely not what I would want to do. So for that reason, I try to keep this as basic as possible. Obviously, if you guys have any doubts, any questions, you can drop them in the comments and I'll definitely be answering them as well. And if you are someone who is interested to learn in depth about all of this, like how to use footprints, because I'm someone who uses footprints a lot, like literally in every trading entries and exits and whatnot. Footprints are something that I use most of the time, so I would recommend for you guys as well. If you are interested in learning about footprints, about TPOs, then I also use session volume profiles and a few other advanced tools as well. So if you are interested in learning about them, I would definitely recommend to check out the footprint mastery program that I've created. The link to that will be in the description. It will literally take you from a beginner's perspective. Like, we have made this particular program that it starts from a beginner's perspective, and then by the time you finish it, you will be an advanced footprint trader. Obviously, we keep on updating the resources that keep on getting added, so you will always keep on learning if you are a part of that program. All right, and also it has a lifetime access, so you do not have to worry about that. Now, before I finish this video, I would just sum it up by saying that TPOs are absolutely important tool. It helps you enter into a market or exit from a market, knowing where market makers are entering and where they are exiting from. All right, so TPO is definitely an important tool that you guys need to be using as well, because like buying and selling volume, yeah, it does tell you a story, but I would say timing them will reveal the truth of where the market has to move next. All right, so that's the most important thing that I would tell you guys about TPO. So that's it for this particular video, guys. Make sure to hit the like button if you have been watching till now, and subscribe to this channel as well, because I stream daily and I talk a lot about this kind of tools and trading strategies and insights and whatnot. So yeah, you would not want to miss that. Make sure to quickly like this video. If you have any questions, drop them in the comments, and I'll see you in the next video. Bye.